By the end of this video, you're going to have a much better understanding of how to fill out the new 2020 W-4, as we're going to walk through a full example. You're going to know how to fill it out by hand. You're going to see how you can actually find the same information or similar information using the IRS website. We're going to compare the results, and then most importantly, we're going to look at how to analyze those results to figure out what those numbers actually mean to you and I. I'm going to do everything I can to keep this video as short and concise as possible, but I don't want to leave out any important details. Keep in mind, I'm going to be putting timestamps down below so you can jump to any point in the video. There's a couple ways you can watch this video. If you just want to know how to fill this out by hand, I would suggest just watching the first 20 minutes of this video. If you want to know how to use the IRS W4 app to help you fill out your W4, I suggest watching the first 3 to 4 minutes of this video and then fast forward to about 24 to 25 minutes in. However, I think it's worth your time to watch this whole video from start to finish, and that's how you're going to get the most out of this video. As a special bonus for you guys, all of the examples we're going to be looking at today on screen are available in one single spreadsheet I've put together that you can download for free so you don't forget what you saw in this video. The first thing we're going to look at is the facts or the case study for this example, and we're going to use a couple who's married filing jointly. Don't worry, I'm going to explain as we go how it might work if you file single or another status. So Chipper is our example, because we all love Chipper.
Rock and roll.
In our example, Chipper is going to make $60,000 per year from one job. Now Chipper's spouse makes $30,000 per year, and she also has one job. Total income before adjustments is $90,000. And they have one child who is 17 years of age or younger, so that means they can claim the child tax credit, so that's gonna give them a $2,000 tax credit, which is fantastic. Don't you love kids when they can save you on taxes? To give you some more detail, I'm gonna show you what it would look like if you itemize deductions. I know most people don't. If you take the standard deduction, it's even simpler, but we're going to talk about that more in the video as we progress. Chipper has some student loans because he worked hard at college, so he has $1,000 in deductible student loan interest. These are the primary facts around this example we're looking at. Now let's get into the forms. Okay, let's look at the first part of this, and that's the form, the W-4. This is page 1 of the W-4. And I have everything filled out already to save us some time in the video. Just so you guys know, this process that we're looking at for Chipper, this is only going to be done for the higher spouse's earnings. After we've gone through this first part, we'll look at what Chipper's spouse should do on her W-4 and what people should do if they have a different filing status other than married filing joint. So the first part of the W-4 is really self-explanatory. You put your name, address, social security number. In this case, Chipper is married filing joint, but if you were, you would put whatever filing status you are. Now, the idea of the W-4 is you want to try to fill it out to best match how you're going to fill out your tax return. So if you file jointly on your tax return, then you could mark married filing jointly here. Now, what most people don't know is that you can fill this out however you want. You could mark single, even if you're married and filing joint. It doesn't really matter in terms of how you fill that out. It will affect your overall withholdings at the end of the day, which is why I suggest you fill it out based on how you file. But you can fill this out however way you want. Most people don't know that this form, the W-4, it really just goes to your employer. The IRS never sees it. Your employer uses it just so they can drop this data into their payroll software that they use to run your payroll check every couple of weeks to figure out how much to withhold from your check. But I always suggest try to fill it out in the way that will best mirror your tax return filing. Now it says complete steps 2 and 4 only if they apply to you. Otherwise, you can skip directly to step 5. Step 5 is you're just signing your name and dating it. So if you have a very simple tax situation, you're just going to put your name here, mark your filing status, and then sign and date on step number 5. And you're done, son. That's it. But I think for a lot of people, their situation is going to be a little bit more complicated. So let's go back up to step 2 and see how we go about this. Okay, it says complete step 2 if 1, you hold more than one job at a time. Now in our example, each spouse just holds one job, right? Number 2, it says if you're married filing jointly and your spouse also works. Now that's the example we're looking at. Each of them have one job. The correct amount of withholding, it says, depends on income earned from all of these jobs. That's where a person can get behind on their taxes when they're filling out their W-4, because they would fill out a W-4 at each job. Well, that at each job would assume that's the person's only income. which is not the case, which is the more income they make, the higher amount of tax we pay, right? More income equals more income tax. That's just how it works. So by doing this process, you're going to ensure that you're withholding enough in total from all jobs combined to when you go to file your tax return, you'll owe basically zero or next to nothing or even get a refund. Now it says do only one of the following. It says you can use the estimator at www.irs.gov W4 App for the most accurate withholdings. To give you guys a complete learning experience, first we're going to fill this out using this PDF or by hand basically is how we're filling this out. And then after we're done, we're going to actually do the same thing again, but we're going to do it using the IRS.gov W4 app, which I completely agree, it is much, much more accurate to do it there. It's so much simpler to use the W4 app, which we're going to see later in the video. And if you want to skip directly to the W4 app, then just follow this timestamp down below. B, use the multiple jobs worksheet on page 3 and enter the result in step 4C below for roughly accurate withholdings. Or C, if there are only 2 jobs in total, you may check this box. Do the same on Form W4 for the other job. This option is accurate for jobs with a similar pay, otherwise more tax than necessary may be withheld. If you and your spouse, if you both work, and let's say one spouse makes $60,000, another one makes $50,000, then I think if they're pretty close in wages, you could probably mark this box and be fine. You can be done with it just by marking that box. Now, what I don't like is it doesn't tell us what the heck that even means. What does that box mean? And just so you guys know, on the second page of the W4, there's 4 pages in all, there's the instructions. And it says, for that part we just read, it says, the box also must be checked on Form W4 for the other job. So your spouse would also check mark that box on their W4. It says, if this box is checked, the standard deduction and tax brackets will be cut in half for each job to calculate withholding. So that's the key primary difference, or that's what that really means. I wish they said that on the front page of the form, but they don't. So that you can dive further into the instructions for more detail. What we're going to do for this video is this one right here, is 2B, is use the multiple jobs worksheet on page 3 and enter the result in step 4C. But before we do that, we can actually do step 3 next. So we're going to do step 3, and then we're going to come back and do step 2. Step 3, it says, if your income will be $200,000 or less than $400,000 if you're married filing jointly, you can claim dependents. And you qualify to claim them based on the qualifying child rules. You're going to be able to get up to a $2,000 tax credit per qualifying child. Man, I love those kids now. I really love them. Now, in this example, we're just using one kid. One kid, which means they get a $2,000 tax credit. We're only putting this credit on the higher earning spouse's W4. So in this case, Chipper's the higher earning spouse, so we're only going to put this on his. We're not going to put this on his spouse's. On the spouse's, we're going to leave this off. This is going to be blank. Everybody follow me? Okay, let's continue. Now, if you have other qualifying dependents right here who are not children, but qualifying relatives who follow the qualifying relative rule test, then you can get up to a $500 tax credit per person if there are people in your household that you claim. Like if your father-in-law is living with you, if you're helping out an older child who's still living at home and you're still supporting them and so on and so forth, you might be able to put an additional credit here. Now let's go ahead and do step 2, which is the most complicated part of this form, and then we'll go on to the final step 4 after that and get this thing over with. Okay, so for step 2, we're going to do 2B, where we're going to use the multiple jobs worksheet on page 3 and enter the result in step 4C. So by doing step 2, it's going to give us this number right here on 4C. It's going to tell us how much tax the higher wage earner or income earner should withhold on each of their checks. So it says for us to go to page 3. So let's go to page 3. I'm going to go down. Page 2 is the instructions to the W4. Then page 3 is this. It says multiple jobs worksheet. It says if you choose the option step 2B on Form W4, which is the form we're talking about, complete this worksheet, which calculates the total extra tax for all jobs on only one Form W4. Withholding will be most accurate if you complete the worksheet and enter the result on Form W4 of the highest paying job. Therefore, just like I mentioned earlier, you're only going to do this process on one W4. If your spouse has another job, or if your spouse has a job and works, you're not going to do this whole process on theirs. If you're single and you have multiple jobs, you're only going to do this calculation on your highest paying job's W-4. For our example, we're right here where it says number 1, 2 jobs. If you have 2 jobs, or you are married filing jointly and you and your spouse each have 1 job, which they do in this example, find the amount from the appropriate table on page 4. It says, using the higher paying job row and the lower paying job column, find the value at the intersection of the 2 household salaries and enter that value on line 1. Now that sounds confusing as hell. So let's just look at the example, and then we're going to come back and that's going to make more sense to you. So this is page 4. This is where we're going to figure this out. It says, first, to use the higher paying job salary row. You're looking at this, you're like, what the heck am I looking at? There's so many numbers. Well, you're first going to start here. See these rows on the left side of the worksheet right here? That's where you're going to start. Now, if you remember from the example or the facts, Chipper makes how much in his job? $60,000 per year. Therefore, we're going to, I highlighted this one to show you where Chipper's wages are at. So that's the row. We start with the row first. Now we move over to the column. And if we remember, how much does this spouse make? Chipper's spouse makes $30,000 a year at her job. Now we're going back here, and so it says to find the point between the intersection. So we're going to look down the column, and this lines up with this row. Where these 2 meet is where the number is at. So right here would be the number we want to use on our worksheet. So now we have this 3,050. We're going to come back up to our worksheet, and we're going to enter that 3,050 right here on line 1. Now, if you have 3 jobs, it's a very similar process, but a little bit more math is taken into account. I'll be honest with you, if you have 3 jobs, don't mess around with this thing. Just use the W4 app calculator on the IRS website. It is so much easier. Because we don't have 3 jobs in this example, we're going to skip down to line 3. Line 3 says, enter the number of pay periods per year for the highest paying job. For Chipper's job, we're using 26 weeks because Chipper gets paid bi-weekly. And now on number 4, it says, divide the annual amount on line 1 or line 2C by the number of pay periods on line 3. Because we didn't fill out any of this part, then we're just going to, what it's really saying is take line number 1, 3,050, and we're going to divide that by 26 pay periods. And we get $117, and that's where that goes. Right here on line 4 is $117. Now what we do is we take that $117 and we transfer it to page 1 of the W4, and it goes on line 4C because that is the amount we're indicating of additional withholdings above and beyond normal withholdings that we want taken out of the highest income earner's W4. We are back up to the first page of the W4. Step 4, it says other income not from jobs. This is if you want tax withheld on other forms of income, like if you have a pension, if you have dividend income, interest income, income from rentals, income from a business, whatever it may be. Now, you can have tax withheld out of your check from that, but I truly, just as a CPA, I don't recommend that. I recommend I think it's much easier for you to track that income separately and not intermix it with all this stuff with your job. I think it just gets too complicated to kind of track that because your income in those areas is going to keep evolving. It's going to keep changing. What I do is I pay tax estimates on a quarterly basis. And that's what I do. And if you have significant amount of dividend income, significant amount of business income or from rentals, I would prefer you make estimate payments because I think it's less of a headache at the end of the day and it's easier to calculate that. But obviously that's just how I feel about it, but you do it however you would like. If you want to have extra money withheld for that income, you can do that right here. Okay guys, we're getting close to this thing being filled out. Now we're on 4B, deductions. It says if you expect to claim deductions other than the standard deduction. So therefore, if you don't expect to itemize, which is going to be most people, you would just leave this to be 0. It would just be 0. But if you do expect to itemize, you're going to put an amount here. Now let's look at how that's figured out. To figure that out, we need to go back to page 3, that worksheet we did to figure out step number 2. Let's go up to page 3. So here's page 3. We've already looked at this part, but right below that part is the deductions worksheet. And this is if you're going to itemize. It says, number 1, it says enter an estimate of your 2020 itemized deductions on Form 1040 or 1040 SR, such as deductions may include qualifying mortgage interest, charitable contributions, state and local taxes up to $10,000, and medical expenses in excess of 7.5% of your income. Now, if you remember, Chipper had $30,000 in itemized deductions from the facts we presented earlier in the video. Therefore, $30,000 is greater than the $24,800 deduction Chipper would get with the standard deduction. So what we're going to do is, on line 1, we're going to put $30,000 for total itemized deductions. On line 2, we're going to enter the standard deduction amount for Chipper's filing status, which is $24,800. We're going to subtract that out. On line 3, we're going to get $5,200. This minus this is $5,200. And then it says, line number 4, enter an estimate of your student loan interest, deductible IRA contributions, and certain other adjustments to income. Now, for this example, to keep it simple, I just said that Chipper has $1,000 in deductible student loan interest. So we're going to add that to this total. So we're going to take $5,200 plus $1,000, and it gets us to $6,200 in total. We're going to take this amount right here, and we're going to put this on the first page of the W-4, and it's going to be on line 4B. At this point, technically, this W-4 is all filled out at this point, and you would just sign and submit it and give it to your employer. Before we go further into this content, if you want to support the work I do on this channel, you can do so simply by dropping a like, leaving a comment below, or sharing this video with others. And thank you so much in advance, and I really appreciate you guys being here. Cheers. Now, if we were filling out Chipper's spouse's W-4, since she makes less money than Chipper, all she would need to do is she would just fill out this top part. She would mark married filing jointly. She would skip part 2. She would skip part 3, because all of that's claimed on the higher income earners W-4, which is Chipper's. And she would skip all this, and she would just do part 1, and she would just do part 5, and then turn it into her employer. Very simple. Now, if you have another filing status, whether it's single, head of household, or whatever it may be, you would walk through a similar process. You would just put your name, your filing status. You would only fill this part out if you were single, for example, if you have more than one job. If you don't have more than one job, then you can completely ignore step 2, and it gets much easier. You would go to step 3, because there's a lot of single people out there who have children. If you can claim them, you would put that here, or if there's another dependent you are supporting, you would put that here. So you would still fill out part 3. If you had income from other sources, like I said, from dividends, interest, rental income, whatever it may be, a business, you could put extra withholdings if you wanted that here. You could have that done. If you take the itemized deductions, you would put that amount here. If not, if you just take the standard deduction like most people, you would just leave this 0, and you could probably leave this as 0 as well, depending upon how you want to go about it. So that is the full process from beginning to end. One thing that has always mind-boggled me about the W-4 and disappointed me about the form is it never actually tells you how much tax is actually going to be taken out of each of your paychecks, which is really messed up, because how are you supposed to ever figure that out? Well, to figure out how much tax should be coming out of your paycheck based on what we just filled out right here, we have to look at it from the employer's point of view. Because this form we just filled out, we're saying that we want the highest job earner to withhold an additional $117 per paycheck on top of what they're already going to withhold. So what about that number? How do we determine that? Well, we have to come to the employer's tax guide to figure this out. And let me just show you how this really works behind the scenes. To find that, you would have to go to Form IRS Publication 15T. 15T. And in the spreadsheet, I'm leaving a link to this so you can find this information. And I've already filled this out. I'm not going to walk through every single calculation step, but this is where you would find this information and how to physically or manually calculate that for yourself to determine in total how much money is coming out of each of your paychecks. The way this works is you would find this worksheet in this publication and fill this thing out line by line. And just to give you guys a quick overview, line 1A is you would take the total wages of Chipper of $60,000 and divide that by the number of pay periods, which is 26. And you would get $2,307, which is that number right here. 1B is just the number of pay periods, is 26. And then on line 1, that all carries down to line 1E. And this amount on line 1F is coming from the W4. This right here, that's where that actually gets used. And that's what your employer's looking at when they're figuring this out. And then that amount, the $6,200, is divided by the number of pay periods to give you $238. And so what it does, it then takes so what it does is it then takes this amount, 2307 minus 238 to give you a taxable, it says this is the adjusted wage amount of $2,069. So the next thing we do to figure out this amount is we have to come down here to these withholding tables, which are also in the same publication. We're not going to use this amount. We need to use the adjusted wage amount on line 1H. We come down here and you're going to find there's a bunch of tables like this that say 2020 wage bracket tables for manual payroll systems with W4 Form 2020 or later. Bi-weekly payroll, which is what Chipper gets. He gets paid bi-weekly. Married filing joint. So this is the column we want to use because that's what we're looking at. We're going to go down here. And using the adjusted wage amount of $2,069, it means Chipper's within this range right here. So this is the tentative withholding amount of $118. So we're going to pull this $118. We're going to put it back right here on line 2A. Now it says step 3, enter the tax credits amounts. Because he's claiming one child, he gets a $2,000 tax credit. The $2,000 tax credit is divided by the number of pay periods. $2,000 divided by 26 pay periods is roughly, rounds up to $77. What they then do on the form is then you take $118 minus $77 for the tax credit, which amounts to withholdings of $41. What's going to be withheld from each paycheck, or should be roughly withheld, is $41 from line 3C, this amount right here, plus the $117 we got from filling out the W4. So in total, Chipper's withholdings per pay period should be right around this amount, $155 to $160. That's where it should be, based on these calculations. And that is how your withholdings in total are actually calculated. That you're probably not going to see in any other video you find on YouTube. That's actually how it's done. Now, your employer, the bookkeeper who does all this, they have software that figures all out for them. They don't have to manually do this, but this is how you would manually calculate that amount. For Chipper's spouse, what you would do real quick is you would go through the same process, but just use the full amount of their wages and ignore any extra credits or deductions against that. So basically, what I would do is I would take $30,000, which is, we know how much his spouse makes, divided by 26 pay periods. We get 115384, and you would just find that right here on the table, which is right in this range. So the spouse should have at a minimum of $19 being withheld per pay period, and that is reflected right here in this calculation. Now let's look at how this all stacks up against if we were to do this filling out the W4 app on the IRS website. This is what the IRS W4 app looks like. This is the first page of it. This is the link. I'll link the link to this in the description section in the spreadsheet. Let's go through this real quick, and you're going to see this is so much easier than actually filling out the W4 by hand. Okay, so the first thing is filing status. We knew that Chipper and his wife were filing jointly. It says, can somebody claim you as a dependent on their tax return? The answer is no. Number 2 out of 5, it says dependents. Do you plan to claim a dependent on your tax return this year? Yes. And now, can we claim our spouse? No. That's all factored into the rates already. We're not claiming our spouse because when the tax laws changed in 2018, that's when the personal exemptions went away and they bumped up the amount of the standard deduction. So you do not consider your spouse as a dependent in this example. Just your children or any other relatives you might be supporting. So we're going to put yes there. How many dependents do you anticipate claiming on your tax return this year? One child who's under the age of 17. Do you or will you or your spouse hold a job this year with paychecks from which federal income tax is regularly withheld? Yes. How many jobs do you expect to hold this year, including jobs you no longer hold? Pretend this is Chipper, so he's going to hold one job. Then it says, how many jobs does your spouse expect to hold this year? One job. Number 4 and 5, pension. Will you or your spouse receive income from a pension this year? No. We're going to mark no. Of course, if you had a pension, of course you would mark that, or how many ever jobs you have up here. But just keep following the example. 5 of 5, check all that apply to you and your spouse. So if you have Social Security, if you have grants, scholarships, and that sort of thing, you would fill this part out. For this example, we don't have any of these things to keep it simple, so let's just move on. Will you be 65 years or older on January 1st of 2021? No. So if any of these apply to you, you'd mark this. If not, continue. Now, this is where we get into the job part. The information it's going to spit out in this calculator is only going to be as accurate as the information you give it. But what's nice is you can rework these numbers a million times over. It doesn't matter. You can just keep going back and playing with the numbers all day if you'd like to. Okay, it says your job. Do you expect to hold this job the entire year? Yes. How frequently are you paid? Now, this is for Chipper, the first spouse. How frequently are you paid? Every 2 weeks. On what date did your most recent pay period end? Now, what I like to do is I like to pretend that they haven't been paid yet. So I'm going to actually put this as Friday, December 27th was Chipper's last pay period. That's what I'm doing for this example. It says, enter the total wages you expect to receive this year. $60,000, okay? $60,000. We're going to assume there's no bonuses for Chipper or his spouse. Just in total wages, $60,000 for the year. It says, did you or will you contribute to a tax-deferred retirement plan such as a 401k? In this example, no. However, most people do, or a lot of people do, so of course you would mark that and indicate how much you would be contributing to your 401k if that was the case. Did you or will you contribute to an HSA or FSA? A lot of people do. I recommend it, but in this example, for keeping it simple, we're going to mark no. Now, the spouse's job. Does your spouse expect to hold the job all year? Yes. How frequently is your spouse paid? Every 2 weeks. On what day did they receive their most recent paycheck? We're going to put the same as Chipper on Friday, December 27th for this example. Enter the total wages your spouse expects to receive, $30,000. We're going to assume no bonuses. We're going to assume our spouse has not contributed to a retirement plan or HSA or anything like that for this example. So let's just keep going. And whoops, as we're going through this, I forgot to enter this amount. It says, using your last pay statement, enter the total federal income taxes withheld. Well, I'm assuming that because the year has just started, that Chipper hasn't had anything withheld. So I'm going to put 0. So for Chipper, I'm going to put 0 there. And then on his spouse's job, I'm going to put that 0 has been withheld so far from their paychecks for the year. The only reason I'm really putting 0 here when I'm going through this is because we're pretending or we're assuming that Chipper and his spouse, it's the beginning of the year and they have not received any checks yet during 2020. Therefore, they haven't made any income and they have not had money withheld at this point. Of course, when you're doing this, you will likely want to take a look at your pay stub, find the line that says federal income tax withheld, and drop in that amount within this box on the IRS website. And what the website will do is it will calculate roughly how much you'll have withheld in total by the end of the year. And it will also, at the very end of that, it will tell you how much more or less you need to withhold to get to your desired tax result. Now it says adjustments to income. Most taxpayers don't have a large enough adjustment to have significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? So I'm going to put see adjustments, and here we go. So student loan interest, Chipper had $1,000. This is educator expenses, deductions to IRAs. We didn't have any of that. To IRAs. We didn't have any of that, so we're just going to skip down to the next page. But obviously, if these things applied to you, you would definitely enter the amounts here of what you would expect them to be for the year. Deductions from income. So we're going to say that Chipper is going to take the standard itemized deductions, and we're going to say that he paid $10,000 in tax. He paid $15,000 in mortgage interest, and he gave $5,000 to charity because Chipper is just that kind of bird. And that's it. So then we're going to click next. Now this is the tax credits input page. You can just mark see credits. The only credit we're taking into account in our example is the child tax credit. And so that's the first one that pops up here. It says, enter the number of qualifying children under 17. 1. So that's just 1. And that's it. We're going to move forward to next. And here's our results. So what this is saying, based on this data that we just input into their calculator, it says that our anticipated total tax obligation for the year is $4,688. Now that's obviously assuming we had nothing withheld from our paycheck, but we know we're going to have money withheld from our paycheck, right? But in terms of helping you figure out how much tax you need to withhold in total from your check plus your spouse's check each pay period, what you're going to do, or what I like to do, is I like to take this amount and I'm going to divide that by 26 pay periods. So we should be withholding at a minimum of $180 combined from Chipper's paycheck and Chipper's spouse's paycheck to make sure we've paid in enough tax. Did we do that when we filled this out by hand? Were we close? Let's take a look at the spreadsheet and let's take a look at the analysis. So if you remember, we calculated that coming out of Chipper's paycheck in total would be $158, and his spouse would have $19 per pay period taken out. Meaning per pay period, they're withholding $177 per check, which obviously is less than the amount that was coming from shown on the IRS website. Let me plop that back up, which is what we just looked at when we took 180 and we divided it, this amount divided by 26 pay periods. So we're coming up a little short. So on our spreadsheet, or on this example, we're going to have a $3 deficit every pay period of taxes we didn't pay that we're going to owe. So what we would do is we're going to multiply that $3 tax deficiency by the number of pay periods, and we're going to come up with $78 owed come April 15th. And that is what Chipper would owe, him and his wife would owe, if this was exactly their numbers for the year when they went to file their tax return. So the calculator comes very close. It's not perfect. And it actually says on the IRS website, it actually says that it's not precise. Because taxes are so complicated, they're always evolving, that it's rare that it's exactly accurate. But we're within $100, which is probably as close as we're going to get. The taxes are so complicated that even the IRS has to admit that their calculator is not precise, because it would be nearly impossible to get it that way. And it says right here, the information is not guaranteed, but this should get you within the ballpark. So that we just filled out the calculator. We just looked at how that compares to how we just filled it out by hand. Now, what does the IRS website recommend in terms of what our withholdings should be from Chipper and from his spouse? If we scroll down a little bit on our website, it actually tells us, which is kind of cool. So if you scroll down here, and what's neat is you can actually revise this to be whatever amount you want in terms of how much you owe at the end of the year. But I like to put it to zero, because the perfect tax result is actually near zero, is if you can get it that way, or as close to zero as possible. A little bit of refund or a little bit owed is not a bad tax result at all. Now going down, we can find right here where it's going to say how much tax should be withheld from each check. So the IRS says for Chipper that he should be withholding $165 per check, and his spouse should withhold $22 per check right here. But what the IRS is saying is that $165 from Chipper's and $22 from his spouse's. We have $187 withheld combined. I wanted to add a little bit more clarification here. Let's say that you're using the IRS website W4 app to help you fill out your new W4 for 2020. And let's just pretend that you're Chipper in this example, and it shows that you should be withholding from each paycheck $165. You look at your actual pay stub from your job and you see that it's only withholding $150, which is a $15 difference. Well, when you go out to fill out your new W4, on the first page of the W4, Step 4, Part 4C, that line that says how much additional tax you want to withhold, you would put $15 more per pay period in that box to help you get up to the proper tax withholding amount, as an example. If your spouse is under withholding, she can do the same thing, or you can put all those additional withholdings on one paycheck or one W4. It doesn't matter however you do it, just that in total from you and your spouse, that the taxes are going to be enough to get paid so that when you go to file your tax return, you won't owe a bunch of money. So what would that do for us? So let's look at the spreadsheet if we followed this advice from the IRS calculator. Well, it's going to give us a refund now. So let's go back to the spreadsheet. So in this example, the way this ends up is, so this is per the IRS website, what they recommend, $165 per Chipper's paycheck and $22 from his spouse's. It gives us a total of $187 withheld in total. the minimum amount of withholdings we saw per the IRS website that from the balance due was $180. So if we withhold this amount, it means we're overpaying every pay period by $7. We multiply 7 times 26, and we would end up with a refund of close to $200 when we come to file our taxes. So as you can see, whether you fill this out by hand or by using the IRS website, you're going to get roughly in the ballpark. It's up to you to determine which way you want to do it best. Totally up to you. Honestly, I recommend using the IRS website's W4 app rather than filling it out by hand. I mean, you can do it either way you want, but it's going to be more accurate on the website, and you're going to be able to figure this information out a lot quicker, I think, than manually calculating and potentially making a calculation error along the way. But that's how you would do it. If you use the withholdings on the IRS website, I think they're going to have you withhold a little bit more than you need. So I think you're going to be more likely to get a refund if you use their app. Whereas if you fill this out by hand, I think you might be a little underpaid come tax time. Woo! That was a long one, guys. Thank you so much for sticking with me. If you liked the video and the information I presented and all this work I put into these spreadsheets in this video, drop a like, leave a comment below, let me know your thoughts, your comments, your questions, all that good stuff. Share this video with others. Oh my goodness, a lot of people I think are going to find this helpful, so please consider sharing this. And if you're not already subscribed to Money in Life TV, please be sure to do so. Every single week, we produce videos to help you become fiscally fit as we teach finances, investing, taxes, and more. I try to produce a new video about once per week, usually release it every Sunday. Best of luck to you in 2020, everybody. Have a great week, live life on cage, and I'll see you in the next episode. Peace!